Hi there everybody, welcome back to the YouTube channel. My name is Devansh and I'm the lead tutor at Finntutors. Finntutors is a CIMA registered tuition provider, and if you don't already know, we have won the Global Pass Rate Excellence Award for the year 2022. Only 6 other tuition providers in the entire world have this recognition, and Finntutors is now part of this group. Why do I mention this? Because you can rely, you can trust, and you can follow the instructions and the discussions that we make, because this method, this course that we have created is proven. So this pre-scene analysis is part 1. It includes the introduction to the company. It includes the introduction to Cuppcar, which is the pre-scene released by CIMA for the November 2023 and February 2024 case study. This pre-scene will be used over 2 windows. So this video is going to be a vital video in your preparation. One very important thing is, for students or for helping students, for students to have a look at our top class material, we have developed a free mini course. The link for the mini course is in the description below. So you can go to the description below, just click on the link, and it will give you access to our industry analysis, to our blueprint explanations. The mini course also includes mock writing tips and tricks. It includes a free mini mock which you are going to get personalized feedback on if you submit it, and a whole bunch of bonus material. So just visit the description box. There is a link. Click on it and it will give you free access to all of this material that I have mentioned and much more to enhance and really enrich your study experience. It's absolutely free. There is no harm in trying it out. So please click on the link and it will 100% be beneficial for you. So now coming back to this pre-scene analysis, we have divided the pre-scene into 3 parts. The first part being the intro, second part being the major functions and the operations of the company, and the third part being the financial and news analysis. So every single word and every single thing that you need to know about our company will be covered in this pre-scene analysis. You just have to follow it. So without wasting any time, let me mention it once more. Free mini course, try it. The link is in the description below. But let's start with this pre-scene analysis. Let's start with the introduction now. So Cuppcar is a quoted company that operates 214 car dealerships that are spread across its home country of Welland. You want to call it Welland, whatever you want to call it. But what I will do through the pre-scene analysis is I will word by word read the pre-scene that CIMA has released. So what we do is we take the actual pre-scene that is released by CIMA. This is not any summary or changing of words of anything that we have done. We take the exact word by word representation that CIMA has released, and then we will point out, we will highlight, we will underline, and we will make relations to E2, P2 and F2 along the way, making the entire revision pattern for you very simple, easy to follow, and obviously help you understand the details of the pre-scene. So when I find something important, I will highlight it, and then you will see a text box appear, which is something extra which we have done to make your revision, to make your understanding of the pre-scene a whole lot better. Let me show you how. So we saw important information here, which was quoted company, 214 dealerships, and home country of Welland. So firstly, because you are a quoted company, keep in mind, you are listed on the stock exchange. So when any company is listed on the stock exchange, the advantage is that you have easy access to capital for growth, you have better visibility, you have better transparency, because everything is, your stock price is listed on the market. It goes up or goes down. Your financial statements will be open for the public to view. It also has disadvantages of being a listed company, where There are lots of reporting requirements. If you don't meet those rules, regulations, there can be penalties, liabilities for your company. So let's just keep this in mind. We are a listed company, and there are a couple advantages, disadvantages that I'm just keeping in mind since this information has been given to us. Now then they're also telling us that you operate in your home country of Welland, which means currently we are operating in one country only. Possibility of expansion and hence different currencies could come into the picture. Right now you're only working, your only business is in Welland. What if they give you an exam scenario where you are starting to expand into a nearby country? You open a car dealership in the nearby country. So your concepts of foreign currency transactions become relevant here. Same way, because we operate 214 dealerships, you can imagine the size of the company. And already F2 related topics such as long-term finance, cost of capital start to come to mind, because this is going to be a capital intensive industry, which we have already learned in my extra industry analysis. If you've not done the industry analysis, please do go through it. It will give you a great start to this pre-scene that I'm doing with you. So all of these topics that I spoke about up until now, listed companies, foreign currency transactions, your long-term finance, cost to capital are part of your F2 syllabus. So throughout this entire process, we are going to make valuable discussions like this and related to your E2, P2, F2 study areas, pointing out important areas or topics that can come up in the exam, plus helping you understand this company. They're telling us that each dealership sells new cars and used cars and related products and services. So in my industry analysis, I have already made a discussion on the new cars market, on the used cars market, on the different products or services that car dealerships offer and what are the major trends. So again, the importance of the industry analysis is coming up. Now from this first page and from my industry analysis, what I'm seeing is there are 3, 4, 5 major things that any automobile dealership must get right to succeed. First will be the selection of the cars that it offers. Second, knowledgeable service staff, because at the end of the day, this is the face-to-face industry. Third, employee and customer management system. You don't keep your employees happy, they can't keep customers happy. Attitude of the salespeople and responsiveness for selling your products, for selling your services, for selling extra services. All these 5 must be done right for any car dealership to ensure that it succeeds, because you need to sell new cars, used cars, insurance, finance, workshops, repairs, warranties. All of this is only possible because all of this is only possible, and it's possible to succeed only if you have a good selection, knowledgeable staff, good customer management system, attitude of the salespeople is good, and your responsiveness is great. So this is true for our company, Cuppcar, as well. Moving on, Welland's currency is the W dollars. So they're telling us that the fictional country of Welland has a fictional currency of W dollars. Wellandian company law requires companies to prepare their financial statements in accordance with IFRS. So again, they can ask you knowledge of different IFRSs, which is part of your F2 syllabus. You are a financial manager at Cuppcar's head office. So now just think, what is the role of a finance manager? A finance manager mainly will deal with medium-term decision making, investment appraisal, costing, project management, long-term finance, advanced financial reporting, advising top management, stakeholder management, project management, group management, team management, all middle-level, medium-term decision making is something that a finance manager does. If you look at all of these topics that I just mentioned, somewhere or the other you will find a relation to the E2, P2 and F2 syllabus. So at the end of the day, like I have always mentioned, if you want to do well on this exam, the starting point is revision. To be a good finance manager, you will need to know your concepts from E2, P2 and F2. Because if they're asking you long-term finance options, and if you haven't done your F2 syllabus, or if they're asking you investment appraisal decision making and you haven't done your P2 syllabus, how are you going to start to write the answer? So as a good finance manager, you will need to have sound technical knowledge to start your answer. And to be a good finance manager, your revision of E2, P2 and F2 will be important, like you can see on your screen. So if you look at all of the above points, you can see that all of them correspond to the blueprint areas set out by CIMA and are eventually part of your E2, P2 and F2 syllabus. So anybody who's just starting with the pre-scene without having done their revision or without starting their revision in the background, I don't think it's going to be a fruitful study process. Your primary responsibilities are associated with management accounting, and you report to Pavarett-Chotteson, the senior finance manager, who reports directly to the finance director. So they're telling you the nature of your organization, which we'll speak about deeper in the pre-scene. But there's a finance manager, then the senior finance manager, and then the finance director. So a functional structure is coming to light. But we'll talk about the structure of our organization deeper into the pre-scene. But because you have management accounting related roles, your P2 syllabus is going to be heavily tested, and it's the most important pillar for this exam. Next, we are going on to car dealerships. So first we did the intro, now we are doing car dealerships, which means as part of this pre-scene analysis, they are giving us some background of this industry, which they want us to know as part of the pre-scene. But guess what? Those who have done my industry analysis, a lot of this is already covered, but that industry analysis is more of a global industry analysis that we have done, knowledge which you can take from there and use when I do this particular discussion with you. Let's start. So car dealers sell cars and related products, obviously, and services to customers. Dealers can operate as single location businesses, or they can have multiple sites. Each site is called a dealership. Remember, Cuppcar, my company, has 214 dealerships. So 214 different sites. Generally, each dealership operates with a significant amount of discretion. So each dealership makes their own decisions, has their own decision-making system. So as we read in the industry analysis, for any car dealership to succeed, the major trends, namely car selection, dealership location, staff selection, must be followed. So for our company, competition analysis and having good industry experience is going to be key. Because how can you make your decisions if you don't know what your competitive dealers are doing, what your industry is going through? So knowing your business model and staying true to the same is very important. A detailed competitor analysis is also important in any service industry. So I gave you two topics here. Competition analysis, part of E2. Business model, what a business model should look like, part of the E2 syllabus again. Next, you are a service organization. Remember that. Car dealerships are a service organization. So when you are doing your revision for E2, P2 and F2, always keep this in your mind. When you're doing your revision, don't focus Yes, you go through everything, but your focus is on concepts which are relevant for a service organization. We will be discussing them throughout the pre-scene. Don't worry about that, but just giving you a heads up. New dealerships are franchised by car manufacturers. So car manufacturers give franchises for new dealerships. Franchises give the dealerships the rights to sell the cars made from that particular manufacturer's brand. For example, Bartow Motors is a popular car manufacturer that makes several models of cars that are sold under the Bartow Motors brand name. So if I want to sell the Bartow Motors cars, I have to take a franchise. Again, relationship management between franchisor and franchisee. In this case, us, Cuppcar, and the relationship with the car manufacturer. So Cuppcar's relationship with the car manufacturer will be important to manage, will be important to look at, because if you don't have a good relationship with the manufacturer, what are you going to sell? So stakeholder management throughout this industry, as it's a service industry, will be key. So your stakeholder management concept, your stakeholder relationship management, Mendelow's matrix from your E2 syllabus become very, very important. Now I want everybody to make an exercise where topics that I am noting down, yes, I'm sure you'll keep them in your mind, but topics that I am noting down, like right now I mentioned Mendelow's matrix or relationship management or long-term finance, you should have a list where you are writing down these topics. Yes, this pre-scene will be given to you as a PDF as well, so you'll have access to it multiple times, but when you are going through it, pause the video, note down the topics. It will help you better revise also, and it will help you better remember also that these are important topics which I cannot in any case overlook. So do this as an exercise. Franchise dealerships cannot sell new cars unless they were made by the designated car manufacturer. If I don't have the franchise for Bartow Motors, how can I sell their car? So that restriction does not apply for used cars. It's for only new cars. New car dealerships can sell used cars from any manufacturer. And used car dealerships sell only used cars, which can be of any brand. Now, dealerships usually have the following facilities. A dealership is not only one place where you can buy a car or sell your used car. There are lots of different facilities that a dealership offers. First being showroom, traditional. The showroom is an indoor space that can be used to display cars and promotional materials. Sales staff usually work at desks in the showrooms or in the offices immediately besides it. All of us have visited a car showroom. We know what it looks like. We know, the setup around it. So that's the first facility. Second facility is a car lot. Now all the cars can't be stored in the showroom, right? So showrooms are really large enough to display all cars held by dealerships. Most dealerships have an outside space that can be used to display cars that cannot be accommodated in the showroom. The image of a car lot has been put up over here just for reference. So first showroom, second car lot where the other extra cars are stored, third being the workshop. Car dealerships are equipped to maintain and repair cars. If you buy a car from a dealership, you'll generally give it back to that dealership for your maintenance, for your service. New and used cars must be checked and adjusted before they can be released to the customers. Sometimes customers want extra parts, extra upgrades. All of this is done at the workshop. And it may be necessary to repair defects in cars that were not detected at the time of the sale. Customers may wish to pay the dealership to carry out repairs if their cars break down or suffer accidental damage. So if something happens to your car, you need a service at regular intervals or you need a repair, it goes back to the dealership. Car manufacturers also require regular servicing or their warranties will be void. So here we will look at differentiating ourselves from our competitors by offering unique showroom facilities, unique car stocking, better service packages and better overall services. So keep in mind that as a dealership, you will need innovative marketing techniques. And for any business, benchmarking can be the place to start with. So your topics of benchmarking, your topics of innovative marketing techniques, your topics of the sales services from your E2 syllabus become important for this industry, because each dealership is having a workshop, for example. But why will the customer come to your workshop? Are you doing something different? That could be a benchmarking process to improve. That could be innovative marketing techniques which are part of your E2 syllabus. So these are major category of 3 services that your dealership usually offers. Next, there is new car sales. Car manufacturers sell their cars to franchised car dealerships who then resell those cars to customers. We've already spoken about this relationship where the car manufacturer sells to our dealership and then we resell it to the customer. So car manufacturers benefit from this arrangement because they can focus on the design and the manufacture. They don't have to worry about selling because that's being done by the dealership. So for that reason, they are often referred to as OEMs, original equipment manufacturers. Remember, there will be high value transactions between the car manufacturer and the dealership because cars are not cheap, right? So when there are high value transactions, you will be buying the cars or whatever, you will be having transactions for the cars with the manufacturers. They're going to be of high value. And when they're of high value, risk management, risk mapping, dealing with risk, dealing with uncertainty becomes very, very important in your decision making. This is your P2 syllabus. So risk management, risk related decision making, risk attitudes become very important because this is going to be high value transactions. Any mistake can cause losses for the business. This is part of your P2 syllabus. Franchises are granted to dealerships that can meet strict criteria set out by the car manufacturers. This includes suitable premises for displaying cars, experienced and competent sales staff, properly equipped and staffed workshops. So the franchise by the car manufacturer is not just given to any person. To get that franchise, you have to meet some strict criteria. So since strict criteria is laid out, if you do not meet these criteria or over a period of years, you let your quality down, then there could be possibilities of penalties. There could be possibilities of liabilities, and hence provisions or contingent liabilities can be a situation that comes up in the exam. For example, you do not meet the criteria, your sales have gone down, and because of that you are not focusing on quality in the delivery of your cars. A customer comes back with a complaint because of some defect on the car which you should have checked before you sold it, and then there is a lawsuit. So your provisions aspect can be asked in this way. You see how simply I was able to create this scenario? Same way in the exam, it's very easy for the examiner to create a scenario around it. So if you haven't revised this topic, you won't be able to give a satisfactory answer. If you can't give this satisfactory answer, then naturally you're not going to get your marks. So I'm just thinking of scenarios that can come up because of the nature of our business, and this is part of your F2 syllabus: provisions, contingent liabilities, contingent assets. Car manufacturers monitor the performance of established franchised dealerships. Customers are asked to complete questionnaires or participate in a telephone poll about their experience of buying a car, or as time passes, of having their car serviced or repaired by their dealership. So car manufacturers will monitor all of this performance. So what KPIs, what key performance indicators are they using to monitor this performance? What factors are they looking at? So for us as a dealership business, setting the right KPIs, setting the right critical success factors becomes key. This is part of our P2 and E2 syllabus. Next, poor performance can be costly. Dealerships receive bonuses, often referred to as sales incentives, for achieving targets for sales and customer satisfaction. So if a dealership achieves, let's say, selling 500 cars, they get an extra incentive. Failure to meet those targets can result in a reduced bonus. From our industry analysis, we already know that this is a highly competitive industry. Margins are low. So if you're losing out on these incentives, losing out on these bonuses, it's reduced revenue for your dealership. If performance is consistently poor, then dealerships can be stripped of their franchises in worst cases. So constant monitoring of performance through innovative performance management systems internally for Cuppcar as a business will be very important. So the BSC or the balance scorecard can be used over here. Same way, the concept of responsibility accounting can also be introduced within each dealership to hold the staff and the management accountable if the dealership is not doing well. You can set each dealership as a profit center or an investment center, for example. Now, these concepts of responsibility accounting, of balance scorecard are part of your P2 syllabus. They are top exam issues, high chance of them coming up in the exam. Next, franchises grant a degree of exclusivity for both dealerships and manufacturers. Car manufacturers restrict the number of franchises within any given geographical area, so that each dealership has its own sales territory and there is no infighting. In return, franchise dealerships restrict sales of new cars to that brand. So the car manufacturer will say, okay, in this much area, only one dealership. The car dealership will say, okay, because you are giving me this exclusivity, I will not sell any other brand. So again, the relationship of the manufacturer and the dealership together are very, very important. A car sales business can have multiple new dealerships selling different brands in the same area. Possibly they can be adjacent to each other. For example, a car dealership is selling X company's cars over here. It can open up another dealership selling Y company's cars. It's another dealership, so there is no conflict. They cannot sell multiple brands of new cars from that same dealership. That is why they'll open up one which is next to it or just adjacent to it. Car manufacturers decide on the quantities and models of new cars that will be delivered to each dealership. Deliveries effectively constitute sales made on normal trade credit terms. In this business, there is naturally going to be credit involved because transaction values are high. So since credit terms will be involved throughout the life cycle of transactions, the capital requirements in this industry will be further evidenced because lots of money will be stuck in receivables, in payables. So your working capital management will be very important. Same way, the concepts of long-term finance and different financing instrument options available will be good to know. F2 syllabus, very, very clear in terms of knowledge over here will be needed. Car manufacturers do not necessarily permit dealers to specify larger allocations of more popular models or fewer of less popular cars. The manufacturer will decide how many of which model to give to the dealership. Car manufacturers are keen to ensure that customers can see their entire range of models whenever they visit the dealership. The selling price of new cars may be based on the car manufacturer's recommended retail price, MRRP. The manufacturer will say, okay, sell at this price. Although this is indicative rather than mandatory. Dealerships are free to adjust the price if they wish, depending on how much margin they want to earn. So, pricing from the dealership perspective will be a very, very important and sensitive topic to keep in mind. So, robust costing and pricing techniques will be important as dealership margins are thin in any case. So remember, robust costing and pricing techniques will be important. Different costing and pricing techniques concept from your P2 syllabus is very important to go through, to keep in mind, and that is why this I have highlighted for you, because costing, pricing, important topics in the P2 syllabus. Now there is an element of profit for the dealership built into the maximum retail price. Although this can be as little as 2 to 3% on economy brands and 10% for luxury brands. But again, this is an indicative price. The dealership sets its own price depending on where it is, what models are being sold. So again, robust pricing techniques are very important. The margins charged on the sale of new cars are insufficient to cover dealership overheads. Just selling the car gives you a margin, yes, but that's not enough. Fortunately, the sale of new car creates many new opportunities. Like I told you, first is bonuses. If you sell a number of cars, you get a bonus from your car manufacturer. Second, most customers trade in their old cars and then buy the new car. So that old car can be refurbished and further sold. So that's another income. Third, commissions on sale of extended warranties. With a car, you often buy extended warranties. On that, the dealership earns a commission. Customers will bring their car back to the dealership for servicing and repair. So you get your workshop expenses. All of these services combined, the dealership earns money. Just by selling cars, the dealership cannot earn money. So, for any dealership business like ourselves, remember the 5 major points that I gave you at the beginning are again being true and again being represented over here. So, a funnel creation is very important. And from the industry analysis, we clearly know that initial costs in this business will be high. But as the dealership settles in, it has many opportunities to increase sales or earn a profit. The holding power and patience will be key in this market. Knowing our customer base and molding our products for their needs is always key for any business. Understanding our business customers and then integrating this into our business model, into our value chain will be very important part of your P2 syllabus. So remember the entire funnel for a dealership business is important to understand and then capitalize on. So I hope again you have a list of topics that I have been mentioning and are preparing that list. Yes, we are highlighting the topics for you, but importantly, we will be giving you questions also, mock questions, exactly like the exam, on these important topics when we get there. Right now, we are just understanding the nature of my business, the nature of my company, and important E2, P2, and F2 points are being pointed out. But we'll be writing mock questions on this to further give you an exact exam feel and exam practice as we move ahead. You don't have to worry about that, but right now you need to be paying attention. So the average selling price of a new car in Welland is $20,000. The average gross profit per unit is $2,400, including sales incentives paid by car manufacturers after the period end. So $2,400 is the average gross profit that you're making. New cars vary in price from 14,000 to 40,000 for popular models, although there are much more expensive cars obviously available that sell in smaller numbers. Welland has 5,200 franchised new car dealerships, and these dealerships employ a total of 620,000 people. So this showcases the nature of competition in this industry. Highly fragmented, which we learnt in the industry analysis, and it will be a large market affected by external factors. So the external market analysis, external market outlook will be important. This is your E2 syllabus. So your external market analysis, external factors is important because it's part of your E2 syllabus. There are 30 popular brands of new cars on sale in Welland, each of which has a network of dealerships across the country. The 5 largest brands they are telling you are Barter Motors, Man Cars Auto, Co-Power, Rod Thayers, and Wenwash. Now these have all 300, 350 plus dealers in Welland. So these are going to be the 5 largest brands, and obviously Cuppcar has 214 dealerships. We'll see the breakdown further in the pre-scene, but it's very obvious that because we are such a large company, such a prominent company in Welland, we will have the dealerships of these 5 large brands, which is going to be a good comparative advantage for us. Next, so remember up until now we were talking about new car sales. Now we are on fleet leasing. Remember, we have not started to talk about our company Cuppcar yet. The first thing we did was introduction. The second thing we are doing is car sales in Welland, or the car dealership industry in Welland. Under it, these categories are coming up. So under it, the first thing we did was the different services that dealerships offer. Then after that, we started speaking about new cars. Now we are speaking about fleet leasing. So some large car dealers offer a fleet leasing service to corporate customers. The customers specify the model and the number of cars that they require, and the dealer then has its dealership supply those cars, service them, repair them whenever they are necessary during the duration of the lease. So effectively, you are leasing the cars to these corporate customers for a period of time. Then they'll give it back when the lease ends. So it will be very important. This is a clear indication that your IFRS 16 on leases becomes important here. They can create a question or a situation revolving around the fleet leasing arrangement, and hence you would require to showcase your leasing knowledge over here, whether it's an operating lease, finance lease, net investment lease, how will it be treated. Very important, this is your F2 clear F2 syllabus indication over here. Lessee accounting, lesser accounting, you should have knowledge of both, which has been included in our revision course and in our study notes. So you don't have to worry about it in terms of revision. You'll have to go through it, but we are giving you the indication over here. Dealerships can count cars supplied as fleet cars as sales. So in your sales, the fleet cars can also be included, which help them to meet the car manufacturer's sales targets. Leased cars are usually supplied under an operating lease arrangement. So clearly telling you operation lease is being used. The factors, the features of an operating lease, the features of a finance lease in your IFRS 16 important to revise. At the conclusion of the lease, the cars are returned to the lessor and are usually sold to the company's dealership as used cars. So you have double benefit. You lease them out, you get them back, then you sell them out as used cars. So having a good fleet leasing arrangement in Welland, having corporate customers, can be seen as a good comparative advantage for dealerships. Let's keep this in mind. Next, used cars now. So new cars, fleet leasing, and third, used cars. Used car sales have previously been used cars have previously been owned and driven by one or more previous owners. That is why they are called used cars. Simple. Some car dealerships sell only used cars, but new car dealerships also sell used cars as additional sources of revenue. Car dealerships accept customers' existing cars in part payment for new or used cars. So if you go take your car, you can trade it in. That amount will be deducted from the new car or the new used car that you are buying, and you have to pay the difference. Simple as that. It's a normal trade-in like you do for phones, laptops. You can do for a car as well. So possible exam scenario now coming to my mind. Our company acquires a small but niche used car selling dealership in a nearby country because it was a lucrative diversification strategy. Cuppcar does this as a lucrative diversification strategy. For example, this brings in topics like investment appraisal, group accounts, associates, joint ventures. It can be an associate, it can be a joint venture, accounting for the same, it becomes a foreign subsidiary. So naturally there is a huge possibility for your P2 and F2 syllabus being tested this way, where there is an expansion strategy that is coming up. And it does happen, it has happened in the past, that is why I am bringing it up for you. So the value of part exchange cars is a matter of negotiation between customers and dealership sales executives. Negotiation skills, relationship management, the process of negotiation for the dealership to get a high profit percentage for the dealership is important. This is your E2 syllabus because you don't want to lose the customer. You want to earn a profit for the dealership. So negotiation skills become important, and negotiation is a topic in E2. The value of a used car is determined by several factors, including the popularity of the model, its age, the wear and tear, and the car's mechanical condition and the condition of its bodywork. We all know this. The average selling price of a used car in Welland is $16,000 for used cars that are up to 4 years old, although there is significant variation between the prices of older models having poor condition or better quality cars. So depends all on the car. The type of car you take for the trade-in is the price, will be matching the price that is offered, but average selling price is 16,000. Now dealerships can acquire used cars in a number of different ways. Let's look at this pie chart. So major chunk is trade-in on new vehicles. People come with their old cars and they will trade it for a new vehicle. Second, trade-in on a used vehicle. So they'll trade in their used car and buy a used car. Third, retail purchases and trade purchases. So both is where a payment is made and the used car is purchased. So if you look at this pie chart, you'll see majority of the revenue for new car dealerships gaining used car inventory is trade-in on a new vehicle and trade-in on a used vehicle. Car dealerships often purchase used cars from other dealerships. That is called trade purchases, or from individuals, which is retail purchases. So this retail purchase is when a car dealership buys a used car from an individual person. But from another dealership, if you want to buy a used car, it's called a trade purchase. So trade purchase, if you rank it, first is traded on new vehicle, second is traded on used vehicle, third is a trade purchase, and fourth is a retail purchase. This is the breakdown of how new car dealerships get used cars. So these are chosen on the basis of their suitability for the dealership's markets, and so they can be sold at a profit. Now the pricing techniques based on cost will have to be spot on for our businesses to enable us to earn from these extra offering. So not only pricing based on marketing factors, pricing based on cost factors. What is the cost that you buy it for? Are you using absorption costing, standard costing, marginal costing, activity based costing for your costing? Because if your costing is not robust, then your price setting will not be robust and eventually business will not earn. So a strong costing system is important for the business, which is part of your P2 syllabus. Trade purchases are made from other dealerships who wish to dispose of cars which they feel are not suitable for their customers. For example, a new car dealership might have taken a poor quality trade-in that would look out of place in its dealership's car lot. So it will trade it or sell it to another car dealership. Now let's think how a change in one aspect of our business or revenue will affect other parts of the business. This can be an important discussion. What if used car sales fall? You have them in your inventory. What if your revenue decreases for these used cars? What if you make a wrong decision for trade purchases? So again, I'm using the word what if, which means risk-related decision making and sensitivity analysis in these situations becomes an important for any service business. This is part of your P2 syllabus. A used car dealership might buy such cars at wholesale prices. Similarly, new car dealerships might be keen to buy good quality used cars from used car dealerships that do not usually trade in expensive models. So again, with used cars, it's all about your stock. It's all about which car you have in which condition at the right time. So trade purchases are important. Their decisions are important. Retail purchases are made from car owners who wish to sell their cars, maybe because of financial difficulties. They want money. New car dealerships will often purchase good quality used cars, especially if they are from the same brand as the new cars that they sell, because they will have the parts, they will have everything ready which they can just quickly change and offer it for sale again to a new customer. New car dealerships evaluate used cars as they acquire as trade-ins and decide whether to sell them as used cars from their car lots. Cars that do not meet the dealership standard are usually sold at wholesale price to used car dealerships. So again, bringing in the importance of a deep external market analysis. When buying a new set of used cars, making any new investment, making any new purchase, investment appraisal methods will be key. Concept of time value of money is important to know for this case study, which is your P2 syllabus. The profit on used car sales varies, but it can exceed the profit on new cars of the same model because each car is unique. I'm not talking about the price, remember, we're talking about the profit. And so the dealers are free to charge as much as the customer is prepared to pay. The average gross profit from the sale of a used car that is up to 4 years old is 2,600. So a major focus for Cuppcar, or a major opportunity for Cuppcar in Welland, is used car sales. Let's keep this in our mind. When we actually start talking about Cuppcar and its businesses, we'll want to suggest, or we'll want to keep in mind, that used cars can generate an higher profit than just selling new cars. Next, we go to part sales. Now, parts can range from accessories that owners buy to personalize their cars, to replacement for components that have worn out. Part sales means your upgrades that you take, or replacement for components that are broken. So stocking and inventories of these products will be again capital intensive for our business, because car parts, car accessories are not cheap. Some you'll have to have in your, you'll have to keep in your inventory. So bringing out the capital need and the capital intensive nature of this business again. Car manufacturers set strict conditions for the quality of parts used in maintenance and repair of cars that are still under warranty. Otherwise, the warranty goes void. So, the concept of total quality management and the concept of costs of quality will be important to know. During the servicing process, if there is any lapse in the quality of fitting the parts or quality of staff, it will be hugely detrimental to the success of the dealership. So your costs of quality, total quality management become important specifically in your part sales or your workshop part of the business. Dealerships must use parts made by the car manufacturers themselves or by approved makers. For example, Bartow Motors makes and sells body panels as replacement parts for the repair of collision damage. Bartow Motors also lists approved manufacturers for replacement parts and consumables like brake pads, engine oils. You'll have to buy it from those specific suppliers or from the car manufacturer. So most of these manufacturers supply the parts that are used in the car's construction. So remember, capacity planning and correct pricing decisions will again be very important. This brings up your risk topics here. Price risk is arising out of adverse movements in global markets. Because every time, how will you budget for the cost of the service? Because every time the price, the labor factors are changing, labor availability is changing, plus the price of these, let's say, chips or any brake pads or any oil or any lubricants or any other parts that you use in the car are changing. So there is price risk, quantity risk, cost risk, political risk. So your P2 topics related to risk management, because of the global nature of this industry, because of the different factors that you have to deal with, suppliers all over the world that you may have to deal with, your risk management is important. This is your P2 syllabus. Dealerships often sell parts to local garages who require parts quickly in order to complete a service or a repair. So there will have to be a communication process and a flow of information between different stakeholder groups. Like for example, you need the part from the manufacturer. So there will have to be flow of information. Manufacturer gives you the part, flow of information. You sell it to your local garage because they've ordered it. Flow of information. So information flow, information management, a good data system from your E2 syllabus becomes very important again for this business. Accessories are often sold along with the car itself. Some dealerships accessorize their cars with floor mats and boot liners in order to make them more attractive to buyers and then incorporate it into the car's total selling price. Parts can also include merchandise such as hats, t-shirts, bags that carry the manufacturer's branding. The use of data will be key here. And if we do not have the past data of the times of booking, which means times of buying the car, and times of booking capacity that we are offering, how will we forecast and make cars or service timelines or service parts available accurately? If, for example, you have historic data, you know from this month to this month cars sell the most, then you can make dealership staff aware of the same. You can do your stocking accordingly. So data usage can be a huge advantage in this market. So remember, when we are speaking about this market as a whole, data and the use of data, the use of how just data can be used as a comparative advantage from your E2 syllabus, the concept of big data, concept of data analysis becomes very, very important over here. The next part we are dealing with is servicing. Cars require regular maintenance in order to prevent breakdowns and minimize wear. Most cars require an annual service, during which various checks and adjustments are carried out, such as your lubricants, hydraulic fluids, engine oil, brake oil. All of this needs to be regularly changed. Somewhere, somehow, all of us must have taken a car for servicing, so we know the standard practice. car manufacturers also specify the maximum distance that can be driven between services. Sometimes it's 15,000 kilometers or every 12 months. So as we have read in the industry analysis, the competition in the market is going to be intense, and hence again, keeping an eye out for competitor strategies will be important. Is my competitor offering 2 free services, 3 free services? Is my competitor marketing in a different way? So like I pointed out already, I'm pointing it out again. Being different from a car dealership in another area, plus offering something different, plus innovative marketing, quite important. So new car dealerships attempt to sell servicing to customers who have bought cars from them. Customers are often attracted by the fact that the dealerships use good quality parts which are recommended, and their staff are skilled, specific staff. Since we will have workshop and dealership staff in good numbers, you have 214 dealerships, remember that. Management of staff related issues will be an important aspect. So good leadership, good health and safety norms, good redundancy issues, dealing process, good management of dismissal issues will be important, because there can be problems that occur when staff is involved, right? So very important for us to note that redundancy issues, dismissal issues, health and safety issues, leadership problems, these are concepts from your E2 syllabus. That is why I'm pointing them out to you. That is why I know that they are important and they do come up in the exam. So I'm pointing them out to you as a revision area, revision focus. So that has got me to the end of this pre-scene analysis for part 1. So what we try to do is, in part 1, we will make the introduction of the pre-scene for you to showcase to you how it's going to work moving forward. The entire pre-scene is divided into 3 parts. We'll have part 1 with the intro, part 2 with the details of Cuppcar, part 3 with the financials of Cuppcar and the news analysis, covering every single word of the actual CIMA pre-scene. And you can see how much detail we are going into. You can see how much focus we have on the on the underlying theme of the pre-scene, which is only possible because we have gone through the pre-scene 5, 10, 15 times, even before we make this video, even before we present this analysis to you. So your job is to tune in and listen to the explanations that we have created. Go through it again, go through part 1 again if the need be, so that you understand it. And if you have found part 1 helpful, you can always tune in, sign up with us and gain access to part 2, part 3 and all of our other material, which is surely going to be something that you find useful. We say this with confidence because we have the Global Pass Rate Excellence Award, which only 6 other tuition providers in the entire world hold. So that's part 1 of our pre-scene analysis. Thank you.